The stock market has so far put in a spectacular run for 2013, a swing higher of more than 13% from the mid-November low and putting the Dow within reach of breaking to a new all-time high. This video seeks to answer the question that many investors are asking on the prospects for the stock market for the rest of 2013, as it seeks to draw on excerpts from the new Stock Stealth Bull Market ebook that can be downloaded for free at the Market Oracle website, which marks a continuation of the Stealth Bull Market Analysis series. My long-standing target as of the Stock Stealth Bull Market ebook of March 2011 and as illustrated by the forecasts for 2012 is for the Dow to target a trend towards breaking the 14,164 previous all-time high to a target of 14,200, which given the most recent price action appears imminent. The fundamental background remains of ever-expanding waves of highly inflationary central bank money printing liquidity that washes over all markets. The Inflation Megatrend ebook of January 2010 reiterated that asset prices, such as stocks, tend to be leveraged to inflation, which is precisely the trends that have subsequently transpired from stocks to commodities such as gold, and as I've been flagging during the whole of 2012, I expect to transpire for the US housing market as well as other housing markets such as the UK. I'm often asked the question, how can the stock markets keep going higher? Well, the fundamental big picture is one of exponential inflation as a consequence of government money printing fraud and the technological human productivity boosting megatrends, which are brought to competitive markets around which asset price booms and busts tend to oscillate ever higher. Again, note that this video just contains short excerpts of the content contained within the free Stock Stealth Bull Market ebook for 2013 and beyond. The past 15 years is one of an exponential inflation and technologically wealth-creating coiled spring that is ultimately being primed to propel the stock market to the next higher equilibrium level, just as occurred during previous similar periods such as the 1930s and 1970s. Despite a 4-year bull run to date, the stock market, when compared to preceding bull markets, is clearly not overextended. At worst, this graph suggests that the Dow on an annual closing basis has at least a further 10% to run. That is a worst case scenario. So there is no sign on this graph for an end to the stock stealth bull market during 2013. The Elliott impulse wave implications are that following a fifth wave peak, that the stock market looks set to have a significant correction that is likely to exceed the size of wave 2 and wave 4 corrections, i.e. more than 1,000 points, suggesting an ultimate decline of approximately 1,500 points off of the peak. So a 14,500 peak would imply 13,000 for the correction. Zooming into the chart implies we are in a sub-impulse wave 3 that should end imminently. However, the more important implication is for a bullish trend towards 14,200 or thereabouts by mid to late March 2013. Now, zooming way out of the chart shows that our 5-wave pattern is actually part of a larger 5-wave pattern that is also set to terminate, i.e. a fifth of a fifth. This acts to increase the order of magnitude for the subsequent correction. For now, it implies that this year's stock market high will subsequently seek to correct the whole bull market trend from the March 2009 low. Again, using the size of wave 2 and wave 4 as a minimum guide, this suggests a decline of at least 2,000 points during a multi-month correction. In reality, the implied correction could extend as far as 3,000 points, i.e. just below impulse wave 2. Therefore, the Elliott wave pattern is suggesting that the stock market looks set to retrace the whole of the current rally to below 12,500. On the basis of the probable simple pattern being for a fifth of a fifth, then this analysis further concludes that the termination point for the fifth of the fifth is that of a larger wave 1, and therefore implies a further 2 larger impulse waves 3 and 5 that will take the Dow well beyond the previous high. Now, don't take this as a forecast, as it is far beyond what probability analysis can ever give confidence to, but take it as an indication that this year's correction will just seek to set the scene for the next multi-year bull run. For the rest of this extensive technical analysis, see the Stock Stealth Bull Market ebook that you can download for free at the Market Oracle website. The conclusion is that the stock market wants to trade to a new all-time high, i.e. 14,164, and is fighting hard to do so against strong technical resistance that calls for an increasingly severe correction. Therefore, I am timing the correction to begin after the new all-time high, though in reality it could take place at any time. The quality of the correction will likely be severe and extend for several months into late summer that would set the scene for a strong end-of-year rally that will likely carry the stock market to a new all-time high. At this point in time, this analysis resolves to a new high of around 14,500. In summary, this analysis concludes in a detailed trend forecast for the Dow to target a correction into late summer of around 12,500, to be followed by a strong trend higher to a new all-time high of 14,500, probably to be achieved during early January 2014. If you have read my ebook, then the message you will get is one of an ongoing stocks bull market that, like a coil spring, is prepping itself to propel the stock market to levels that cannot be imagined today. I.e. my Elliott wave and broadening top analysis gives strong indications for a longer term expectations. For instance, I can easily see the Dow trade at 20,000 during 2017. So expect plenty more stock stealth bull market videos and ebooks to follow. Ensure you are subscribed to my YouTube channel and free newsletter to get these in your email inbox. Your analyst, Nadeem Walyat, 10th Feb 2013.